Okay, good morning, everyone. Happy to have you here. It's right at 8 o'clock in New York time, and we should be starting now. I hope you guys had a great weekend, and we are going to try now to identify a couple of trades that we are going to try to take. The way I trade is that every Sunday, as you all know, we have what we call the trade planning session. And in that trade planning session, we do our homework for the trade plan to trade the week. And as you see here, we have what's known as the long point, the short point, the structural long, and the structural short. And we also have the long stop and the short stop. So if I'm going to take a long position, then I'm going to use that stop. If I'm taking a short, I'll be using the stop. Now, if you see that one of these, they're all white like this, i.e. that the prices did not, in those currencies, did not go above or below our entry point. So we are not really taking a trade in these pairs. But like here, for example, the pound CAD, we had a buy signal to go long at 150.08, and we had a buy in the pound Swiss, okay, and in the Aussie CAD we're short, in the Aussie yen we're short, and in the Aussie dollars, and these are entry points. And these are, for example, the Euro CAD we're short, the Euro pound and the Euro yen we're flat, and we're short the Euro dollar from 119. So basically, these are our positions that we are carrying from last night. We do this trade planning session every Sunday on the website. Everybody comes in, we log in, we have about between 50 to 75 traders come in, and we sit all and plan our trades. So based on that, we're going to use this information in planning our trades this morning. And we want to see, the first thing, I want to see which ones are the ones that are beginning to give us a setup that we are looking to be buyers of. So for example, looking at this is the dollar yen. We had from yesterday, I want you to see this, how we trade. So the dollar yen, we had our buying point as 92.14. We came up to the 92, and we haven't yet. But we came above what we call a structural point, which is the 91.73. We picked these numbers from the daily chart, and then we transpose them to the intraday chart so that we know how we are going to trade. And as you see that above, we're using the 91.73 as our stop. So if I'm going to buy at 92.10, I'm placing my stop. And we do that for every single pair that we are planning to trade. So we're going to wait for the initial 10 minutes or so that we can see how the market is setting up. I do not like particularly to trade the first 10 minutes. The reason is it's too much noise, and it is non-directional, if you will. But if you look at what part of what we did yesterday, so at least the operation work that we do, because you're free to trade any you trade. So this is one of the workspaces I'm going to share with you that we do, and it's an important I think it's a good habit that you should get into by having a session on Sunday prior to the markets open that you look at and begin to analyze your. So, for example, this is we used here. For example, this is the dollar index. That is the chart for the dollar index, i.e., the chart shows the dollar, the basket of dollar versus all the currencies, and you can see. Please refresh cam. Okay. Is the cam okay? Linda, okay? Okay. So just by looking at the index, which is the basket of all of the dollar against all currencies, it is pure dollar. So that is the shape of the dollar chart. And as you can see, this thing has been an upward trend. We started to buy it, the dollar, from the 76.04. This was our first buy in the US dollar, and now it is trading right towards the 88.94. So you can see just by this that the dollar is extremely strong. And if we want to be trading a currency, we want to be buying the strong currency. And if we are going to be selling, we are going to be selling the weak currency. So if that is the strong, let me show you, for example, the weak currency, which is like, look at this. That is the euro dollar, and it's the basket for euro dollar, basket of other currencies. So it's again the dollar, the euro CAD, the euro Swiss, the euro pound, every single euro pair. It is a trading, and thus far you can see the dollar is going up perpendicular. This is coming down perpendicular. So what would be the best pair to trade? It becomes a no-brainer. You want to be long the dollar and you want to be short the euro. The same thing with the Swiss franc. Again, you can see the Swiss is declining, very much like the euro, and therefore the best trades of last week or the last few years, guess what we were taking in the room? We were taking the dollar Swiss and the dollar CAD on the long side, and this is how we do our homework. We say the dollar, we can give it so many pluses for the degree of strength and so many minuses for the degree of weakness, and the less minus signs, this means that they are less weakness. And what we want the strongest of the strong versus the weakest of the weak. Okay, and that's what we do every Sunday, and then we go and pick the trades of the pairs that we are going to be trading after knowing how the currency itself is trading. Okay. Now, having said that, this is now our radar screen, which is our first step in our trade selection. And what that does, number one, it gives us two things. Again, we do not use any indicators. I do not use any moving averages, the S&P, I will tell you all this. We publish, hold on a second. We publish a newsletter for a group of hedge funds, institutional traders, and I'll show you the one that we did this morning for this week. Yes. Is it how do I refresh it? I just turn it off and on again? This is the newsletter that we publish. So the S&P, basically we're looking for it to go down towards the 1036. Do you see it? There should be sound. So basically we're looking at the Dow and the S&P. They haven't turned bearish yet, but if they do trade below 1036 as far as the cash S&P, then we're getting into starting a bear leg into the market. This is the institutional newsletter that I publish. It goes to the institutions. Basically, it is a co-project between us and multi-capital markets. It's called the TT Technicals, and it goes to all the institutional hedge fund traders. Okay, that's the so. Okay, so guys, can you hear me well? And so, no, I'm looking at long-term macro stocks to go down as long as they are above 1,036. We're fine. If the stocks break below 1,036, that is a structural point, and we will be looking for, let me show you the chart for the this is the how can I refresh? I mean, I'm trying, is there a control R or something to turn it off? Is this better? Okay. So this is the S&P, guys, and the 1036 here is your structural point right there, and it has been tested on Thursday, and it held. So as of now, we're okay. We're not yet in a bearish. I mean, it's not positive, but it's okay. It could be a pause. It is not yet a sell. It's not a trend change. But if it gets below 1036, we're short. Okay. So let's go now to the FX and see what we have. So quickly, we want to just take a quick look at what we need first to look is we do our portfolio selection. I want to choose which ones is the currency that should be moving, and I want the ones with the smallest risk. So this one here, the dollar Swiss, is one with the smallest risk. It's not a black screen, it's my radar screen. That's okay. What is it? Timed application or window? Okay. So what we're trying to do is we're trying to find the ones with the smallest. This one is a calculator for my stops. So I want anything less than the average stop. That would be a good candidate for a trade. So the Euro CAD is a good candidate. The Pound CAD is a good candidate. The Dollar CAD is a good candidate. And probably we might get some action in the yen pairs, because you see the yen now is trading at 91.93. My buying, it was below my short point. Okay, now so the first thing that's moving, I've got the pound yen moving and the dollar yen moving. So probably let's see the dollar yen then. Moving. You want to see the euro yen, euro dollar? But the beauty of this, the software we use, Max, is that if there is nothing happening in the euro dollar, it's going to be blank. It will tell you that there is no signal. So you see here the euro dollar is blank. There is no signal here. This means there is nothing really happening with the euro. So you don't really need to waste your time. These are the ones that are moving right now, which is the yen, the pound yen, the pound Swiss, and the Aussie yen. Everything else is not moving. So let's see the pound yen. Once you see something here next to the euro dollar, then you know you're getting some movement. Anything before that, you're forcing the issue. Look from yesterday here, yesterday night and Sunday, our buying point was 132, and you can see that they bought it yesterday. This is the 132. They bought it this morning out of the London session, and now they're already up above about 100 pips. And we have the second buy point of 133.45. So I can I can join into that. I believe the symbol is not sufficient. I have to log out and come back. Hold on a second. But anyway, you can contact the office. I think some guys will be here from the office. But It's I'll have somebody write you the email address in a minute. So, but it's info@spyglasstrading.co.uk. Oh, or James, baby. Okay, James said it for you. So right now, what we need to do is to start buying the. So I took the pound yen because it's continuing in the same motion. So now this means I'm getting some movement in the yen. I want to see what other yen pairs are moving. And in this case, I want to be choosing something like the euro yen in this case now. And I want to be looking at the Aussie yen. Okay, that is also the Aussie yen. It came above the buying point, but it does have multiple days here. So trying to buy the Aussie yen. The Aussie yen and to the euro yen. The euro yen also looks okay. These are all the buy signals that we took from last night in the trade planning session. Okay, there is the euro yen. Okay. Okay. And of course, last but not least, let's see the dollar yen. And the dollar yen is above the 91, so that's good. All right. So basically what I'm doing now, all the signals that come to me from the radar screen, that the ones that are moving are the yen pairs. So I don't need to waste my time with anything else. They are the ones that are moving, so these are the ones I want to be trading. And then I'm going to start looking for the ones that are strong. So the dollar is strong because now it's zero, so it's near the high of the day. And the Aussie yen is also strong. The euro dollar is not. The euro dollar, who wants to trade the euro dollar, is beginning to move. Somebody wanted to trade the euro dollar. By the way, guys, like Maud was telling you in the expo in Barcelona, the international, I'll be coming there, and the ones that would like to be on the team that I would trade, make sure that you send your confirmation to Maud, and it's going to be first come first serve. So whoever signs up first, we'll try to take them in to train them while we're in Barcelona. Okay, or send me an email at SpyGlass, but you have to confirm with Now, while then we take a look at the radar screen to see what is. Now, with the radar screen, it's helpful because we can gauge, for example here, I have nothing in the dollar Swiss, so I'm not going to waste my time. The dollar yen is still up 3 points. The pound yen, as usual, is coming back. But it's still positive. It's still 10 pips above the buying point. The Aussie yen is so far the best, the strongest of all the yen pairs. And I'm using the retracement. This is not Fibonacci. This is something to tell me to gauge the strength or the weakness. So the strongest of all the yen is the Aussie yen. Believe it or not, then the Euro yen, and the last of the weakest of all the yen pairs is the British pound, because it came back over 70% from the. But let's see the pound yen so we can make a judgment call. Look at the daily here. This the thing to do, i.e., the closer it is to the weaker it is. And that's why you see here taking 4 positions by choosing the strength or weakness, guys. This is what you see on top of here. This is what the trading is all about. You take 4 positions, 3 of them are green. Okay? So this means you have a system now that is working 80% of the time. You have something that is working 80% of the time live with no. We have, of course, ways to trigger the order to get in. You can have the orders taken automatically for you, or you enter in yourself, but it's a part of a process, Shane. The process begins every Sunday. Every Sunday at 7 o'clock London Standard Time. So I don't want to get confused Greenwich and so London time, which is 1 hour different from GMT. We get into a room like this that you have over here, and we analyze and plan about 15 different currency pairs. And we identify for ourselves where are we going to go long, and we enter them. This is like our trading plan. Where are we going to go long? Where are we going to go short? Where is my trend changing point, the structural long and the structural short? And if we take a trade long or short, where are we going to put our stop for the long? Where are we going to put the stops for the long? And where are we going to put the stops for short? This way, the next day when the market comes in, it is very easy for us. All what we have to do is to apply this plan and be able to also to control the risk and gauge in the process the strongest or the weakest of the pairs, so you can choose. So it's obvious. You look at the pound yen, it is 66. The dollar yen is 33. The Aussie yen is 17. and the euro yen is 34. So the strongest is the Aussie yen, and you can see it's basically scratched. Then the euro yen, and it's positive. The dollar is the third, so it's kind of scratched. The weakest, which is the pound yen, and that's the only one that is showing red. And again, we don't know as traders which one is to be the one that's going to be moving farther fastest. We take only the high probability trades, and we have to take all the systems. So when you take a trading method system like I'm doing here, and that is extremely important. What you're watching here is extremely important, guys, because that is what trading is all about. You take the high probability trades, you have something that works more time than it does not, and you have something that's now, or was a minute ago, working or making money on 3 of them, and just one that's not. And these, when you're looking at 1 pip or 4 pip or 3 pip in a foreign exchange in a $3 trillion market, this is practically nothing. So it's not even the spread. So anyway, let's see the charts now so we can. This is the pound yen. It's coming back a little bit, but the market side here is the 133.27. So if it gets beyond that, then this is where if it gets back. Look here now, it went back inside the range. So it just went, it's gone. And now it is beginning to become so it is not yet an exit point for us. I mean, our stop is on the other side of, so we'll just see how long, because the markets you see here, the blue lines, these are, they're not, second session, and they begin, and they are at counting, if you will, and finding out what is the meat of the session, what is the center of the session, the core average of the session. And they do act very nicely as intra-session support and resistance. So in this case, it is still holding on it. If it breaks farther below it, then I will close the trade. So let's see the other, because we want to see that the yen is being, let's see the dollar yen. All of them, you see our buying point was 91.73, so all of them are above the 91.73. So I really don't see, there is your market size. There is the dollar moving. So we should be okay. This is our second buying point, the 92.10. This should be here. This is the second buy. So we should be looking. It's normal to come to the high of the day and bounce off a little bit. So that's still strong. Let's see the LTN. Looking at the daily, just looking at this, you have a good buy signal there. And as you see here from that the Aussie yen is 35, so it's the one with the least retracement. This means it is the strongest. So I can easily, if I wanted, once this stabilizes, I can add another Aussie yen to my existing position, because it's only been sitting there near the high of the day. Every time I cancel it here. Okay. Alright, so I got the second Aussie yen. Pound yen is beginning to hold. You see the pound yen now is coming above again, so it's getting positive. Okay. Now the Aussie yen is moving. See the pound yen. Dollar yen is not bad at all. Okay, so we added another dollar yen. So I'm only buying the strong ones. I'm adding to my strong ones because now we got in. You want to see which one of the strong and the weak. You want to buy the strongs and you want to sell. Abel, if you want to know these yellow lines and stuff like that, it's these are stuff that the software identifies for us, which are core of the market. And based on that, there's so many things here. I mean, you're welcome to call the office. They will do a presentation for you, whether you can do the presentation online or you can come to the office if you are not in the UK. Are you in the UK? Okay, then you can call the office. They will give you a desktop like this, and one of our traders there will sit and teach you, and you can take control of the desktop and experiment with it, place orders. You can spend like half an hour with the platform, and yeah, yes, you can sit and play with it and via the internet. You just need to call James and schedule a time because we have, as you can imagine, there's a lot of people do it. So just schedule a time and he will set you up with a computer and you log in and basically you just take complete control of this and you can trade any pair you want. You can trade a demo account, whatever, and get a feeling of everything. And you can do it via the internet. Okay, so we're still okay. I plan for the week, and then during the week I execute my plan. So these are all my plans from the week. So for example, the pound CAD. We didn't do the pound CAD, but the pound Swiss, we're long from 168.37. We have a structure point of 168.94. So we will be buying when it gets there. This morning, for example, the Aussie dollar, we're short from 82.12. So we're just fairly short about 10 pips right now. This is right now the trade is being taken. We're short the Euro CAD from 128. And basically the rest of the market, nothing has. I mean, if it's white like this, it just means that there is a slight movement. But the actual movement, Boyki, is in the Aussie yen was 76. Yes. The Aussie yen was 76.15. That is correct. But I took it now. Right now, I have to execute a trade. I mean, the people that are coming into the room, when I give you these numbers, Rostov, I'm giving it to you on the assumption that some of you are not with us. They don't have the software and the tools we have. I don't know your real name, but for us, that's the benefit of having the software. I can make a better decision earlier than what one would do without the software. And of course, it makes a difference. Again, just please, guys, any questions? I mean, I don't like to do these sessions to promote stuff. There is James right there and Michael Douglas. They are more than happy to answer you. So please, Mike and James, answer the gentleman or contact the office, guys. I mean, this is for education, okay? And we're more than happy to answer it for you. But again, guys, what I want you to see is something which is extremely important, and this is what trading is all about. I want you to look at the 4 positions on top here, and they are consistently 3 of them are making money, and 1, which is the weakest of all, the pound, is losing money. Now, yes, it does. Any software is a combination between you and that. The software is what makes it easier for you and facilitates your decision-making process. And it tells you and it guides you because it doesn't think. It follows a set of rules. We don't use any algorithms, no moving averages, no RSI, no Fibonacci, none of that stuff. We are using basic behavior, chart structure, and following the old classic trading rules. Okay? And the proof is in the pudding. That is your position right in front of you with real money. And you, at the end of the session, win, lose, or draw, this is the number I have, and you have something that works on a consistent base. And that's what you want. You want something that, if you have a way of trading that gives you 3 winning trades out of every 4, you have a 75% success ratio, some good money management, you can start your hedge fund next week. That's what trading is all about. Okay? Now, what the software does, it allows me to make my decision much. I kid you not. A hedge fund today, if he is doing 60% bola and he's making money on 60% of his trades with good money management, he's one of the top hedge fund performers. So anyway, what it is not like you say, for example, it's the car or the driver. It's not the car, it's the driver. You need to know how to drive the car, how to use the car, and how to maximize for it. This is nothing more than a tool that can help you maximize your trading skill, sharpen your trading skill, and make you a better trader. Every day you use it, you become stronger and stronger and better because it trains your eyes to see certain things. Right here, you would see that this is above the market side. You want to be a buyer over here. Right here, it's still above the market side. I have chosen to get out. I'm staying. It has come to the momentum highs. These are our momentum highs. And this is exactly where the prices came this morning, and it stalled. That stall at the momentum high is not by any means a reason to get out of the trade. These momentum highs are doing their jobs. And all these are tools that the software bring to my attention so that I can make a better trading decision. So anyway, again, if we look here, you see that the pound Swiss. So when you're driving the car, Chima, how long does it take you to monitor the steering wheel when you're on the highway? Exactly. When you're trading, you're sitting, but you're relaxed. You watch. Okay. Yes, I can. You're watching your position, Kima, and you want to make sure that it is giving you. A computer is as good as the data that comes in. And you all remember the other day, a few weeks ago, when they had this big meltdown and they said it's a fat finger, and everybody was talking about the fat finger and blah blah blah. And the reality is, up to now, they don't know who did the fat finger, and it doesn't make sense that you have a fat finger in a stock, and then you see that meltdown is happening in gold and happening in crude oil and happening in the pound and the yen and the euro. What does a fat finger in the stock have to do with what happened is, once this bad tick or bad data came into the computer, it started the chain reaction of bad data, and that's what happens: garbage in, garbage out, and you get. So when you are in a trade, as long as you can make a judgment that there is no bad data coming in, exactly, then you are staying on the right side of the trade and you're sitting relaxed. Your decision making process is much more easier and much more consistent because you're doing the same kind of trades every single time based on the similar rules. When you do something over and over again in a specific way, you are able to become a consistent trader. Okay, these names that we have here, I know you all want to see them. These names here, they have no, this is just names for us. They don't mean your retracement, they don't mean your delta. We just couldn't find the name that to give it. So basically, a delta, it's how many pips are the market, if it's red, how many pips the market is coming down. So in the dollar CAD, it's 18. The Swiss, it's down 4 ticks from the entry point. The delta is where you take the trade. So if I took a short, so this is the trade, I should be short the dollar CAD, and if I did, I am now 19 pips up. If I shorted the dollar Swiss, I should be up 3. Going long the dollar yen, I should be up 9. I came in late, so I'm just down 3, which is the difference between the spread. This one doesn't take the spread into consideration. If I shorted the pound CAD, I would be up 30, and it's at the low of the day. So that is very weak, and I want to stay with it longer. It's at the low of the day. Look at the dollar CAD. It's weak, and it's at the low of the day. So I want to stay with it. So this is basically how many pips you're making on the trade if you took the trade. I want to ask a favor from you, if I need to give you an opinion about anything, but please do not put a name of somebody, okay? Because I do not want, I want to give you my opinion, and I don't want somebody to say I'm contradicting somebody else, or I'm saying something different about whatever somebody else is saying, okay? So you want somebody, I'm more than happy to give it to you. Let's say the momentum 1 hour, stuff like that, okay? Fair enough? Just tell me what your question, I'll be more than happy to do it. Anyway, this is the dollar pound CAD, and so let's see the euro dollar. Based on the euro dollar here, euro dollar. Based on our numbers, we are Our buying point in the euro is 119.55. You have your buying point. No, I didn't ask to stop the question. I didn't ask to stop. All what I asked is just don't tell me repeating it. Okay, so you have your buying point 119.45. Our short point is actually one. So let's see what the euro dollar is. No, as far as I'm concerned, we really don't have as of now, it is not yet a buying point. You can buy it if it gets above 55. It's right there. I mean, it's a little bit, if you want to scalp it, it might be a scalp buy. It's not something that I would be jumping on. Thank you, sir. Here is how we do it, Radio Star. You see these lines? This is fixed and never change. I never predict. I will never tell you that the market is going to go higher today or the market is going to go lower today. Because I do not have that crystal ball and I don't see the future and I don't know. But what I know is I look at the chart and I identify certain points where traders would behave in a specific way. I identify a point where a trader who is short is going to start taking profits on his short positions by buying, and when he starts buying to cover his short positions, he is going to create a short covering rally. We're still coming into the ninja, yes, but it will be very soon. Okay? If TradeStation works with Ninja, then it does. Okay? So, we identify these price points, who's the gentleman Radio Star, and based on these price points, we make our decision. If the price goes above that specific point, I will be a buyer. If the price trades below this I am going to be a seller. So, for example, in the euro, the buying point, the short covering for the euro, is going to be above 123.80. So we need at least another 400 pips, if you will, before there will be a rush to short covering that would lead to a big move in the move up in the euro. This doesn't mean that you do not scalp if you want to. If you wanted now to scalp, then you would look at the short term here, and there is a smaller rate of trend changing points. So for example, this morning, this was your first buying point. And right now, if it gets above the 1963, that would be a second buying point. But right now, if it's below these lines or inside that range, it is no longer a high candidate for a buying point. And now you see the whole market look at this now at the radar screen. this is just began to be empty. Blank, blank, blank. This means there is just the oomph has gone out of the market and there is nothing really moving. And you see that there is no signal here. It's a waste of time. So basically there is nothing. The whole market's moving. I mean, if the prices are above a point, it will be green. If it's below a point, this means the short go red. If it's here, it's nothing. The 200 tick, you compare it to a 15-minute. You do not want to be trading anything less than 15-minute, guys. Anything less than that, you are trading against computers. You're trading against algos. And these algos, you have no idea what is they're doing and why they're doing why it is. So exactly, it has to do with the or institutional order flow. Absolutely. But he's saying, why do we put a lot of importance on the beginning of the session? It is the institutional that are coming into the session this morning, and they have their orders, and they have their order flow, and they are managing their position based on the orders they have, and therefore, in respect, see, the job reports, we have the other time that we took the job report, I think we took it, we closed it, we made money that day on the job report. We made about 100 and some pips. Can't remember which pair is it, but I remember the one I took it that day. We made over 100 pips on that trade. We have a different style of trading, and guys, this is what makes it a market. Everybody has his own way of trading. So I am very much, and the way my traders trade, we're very much rule-based. And rule-based means is that if I am going to take a trade, my reason to take a trade is not subjective. The reason I take the trade is not something that I have to explain. And the reason that I have to take a trade does not change from one day to the other. Because the day of I can foreshorten my trading and exactly took the trade to go long, and why I took the trade or short. I don't need to say I had a divergence and I had a turning around and the RCI is doing this. We don't do that. For us, in our style of trading, is wasted money and time. And again, this is us, SpyGlass and training traders. This is what we do, and this is how I train the institutional traders. I mean, I'm going next week. I'm going on Friday to Chile to teach trading to another Bloomberg group of institutional traders, and they are using these methods now because all the computer programmers, they know how to program an MACD, they know how to program a moving average, and now it has become one computer programmer using the MACD, fighting another computer programmer with the MACD, and the one that has more money in his buying power will win. And of course, for you and I, this doesn't give us any leverage or give us any extent to become successful into the trade. So if I cannot compete, of course not. Absolutely not. I would be happy. A Bloomberg trader, yes, the trading desks, all on the institutional traders that using Bloomberg, these are put on the Bloomberg machine. The speculators, my friend, is a trader that does a good service for the market. He facilitates the business. There is no one speculator or a group of speculators that can push the market in any direction. But if you wanted to get out, let's say you're a bank and you wanted to get out of the euro, or you wanted to buy some euro because you have a client that wanted to pay a letter of credit, you have to go to the market to buy the euro. Then a speculator will sell it to you. That's why he facilitates the business, No, scalping is this. Scalping is when you take a trade and you're looking for 10, 15 pips, 20 pips, quick and out. Short selling is when you're selling to the downside. I mean, the idea of short selling was the term short, if you will. This is towards we are talking about the debt, the European debt or the Greek debt, and the instruments, the bonds. So they don't want you to sell these bonds unless you have them. What would happen when the word short comes in, or the term short, was that you would borrow the instrument that you want to sell from your broker, turn around and sell it, and then when the market goes down, you buy it back, take the profit, and turn around and give the bonds that you have sold, you give it to your broker. They have prevented that in Germany. I don't think it means anything or it has any benefit, but I'm sure they have better. My maximum risk. Yeah, absolutely. My maximum risk on the trade. You're talking on the trade, Peter? The risk on the trade has to be in relation with the chart that you're trading. There are three kinds of stops. Okay? There are three kinds of stops. One, the first stop is money stop. And the money stop is you decide I want to risk 20 pips, 30 pips, 40 pips, whatever. That is a money stop. The second is a technical stop. The third stop is a time stop. So the money stop is that you decide how many pips you're going to risk on the trade. The technical stop is that you look at the chart like this and you say, I bought it over here. I'm going to put my stop below this low, or I'm going to put my stop below this momentum low. You're trying to see where the market has had support, has stopped, has been retested, and you take that as a stop. That's a technical stop. So here you'll be using a money stop. Let's say if you wanted to risk 20 pips, this will be your money stop. Here, this is going to be your technical stop. And then there is the third stop, as I said, which is the time stop. And that is when you take a trade and you're waiting for your position to make money. And let's say you sit in the trade for an hour, like I'm sitting right now, or 2 hours, and nothing is happening. Then you close the trade. Let me, guys, ask you all a question. Out of those 3 stops, which is the most important? The money stop, the technical stop, or the time stop? Okay, let's take a vote. Who says money stop? Quick, guys. Okay, let's do it. I think the majority, guys, they are, from what I see here, the majority are saying that the money stop, and then the technical stop, and then the time stop. The reality is the most important stop is the time stop. That's the number 1. The second is the technical stop. Last but not least in importance is the money stop. Why? Because the money stop, you choose this number haphazardly. I mean, you use an average true range. You decide you want to do 40, 50, 20. I will explain it to you. So it is something that you choose, and it falls into the category of prediction. You predict that the market will go against you 20, 30 pips, and it shouldn't go after that. So it is also a little bit of playing God. So that's why sometimes it is good, but the technical stop is better because you're watching a location on the chart where the market has already behaved in a specific way. It has layered itself. It has set in either multiple higher lows, multiple lower lows, gave you a structural failure, gave you a turning around point, created a significant point. You can see those structural points and you place your stop right there. The time stop, the time stop, it's going to be a combination of a technical stop and your time. So basically, it is about 6 times your time frame that you're trading. So if you're trading an hourly chart, you take in the trade, and after, let's say, 5 hours, you're not making money and you're not losing money and you just wasted it and nothing is happening, get out. It is a multiple of the time frame that you trade. Between 5 and 6, depending on the currency. So 5 times the chart. Trading a 15-minute, then it's an hour and a half, you get out. If you're not making money in an hour and a half, get out. Find something else. Of course, it all comes to money. Why are we doing this? So, as far as margin, 100 to 1 is fine. You don't need to go more than that. Okay? More than that is too risky. What about trade at London lunchtime? Well, technically we trade at London lunchtime. Right now, it is London lunchtime. 8 o'clock New York is London lunchtime. So, You are in essence trading it. So anyway, that is your euro dollar, guys. Somebody was talking about the euro dollar. Now that is a decent trade. It is kind of holding. Yes, my pound yen is still open. All of them here, they're all open. The Aussie yen, the euro yen, the pound yen, and the dollar yen. Here's the euro yen. You have to do your right stop, Peter. When you're talking position sizing, I don't know. I mean, we have at SpyGlass we have something different what we call position sizing. Position sizing. This is when we do the long-term trading and we identify our the currency that we're trading. We equate that to the amount of capital we have in our accounts, and then we try to normalize it to make sure that every pair is traded equal. So that is what we mean by position sizing, and we trade only in units. Okay, so sounds that is this better? No, not really. I'm not particularly scalping right now. I'm just waiting. I mean, the market is not doing anything for the time being. Position trading this is long-term trading. This is what we do from Sunday to Sunday, and these are basically our position trade. So for the dollar CAD, we're short the dollar CAD. That's what we are. Anything that's colored, you know that is our existing position. I need you to send me some more details. I'll try to help, but I need more information, so at least if I can give you a decent advice. You're trading 500 to 1. So send me an email. Send an email. This is the net change. Send me an email, Patrick, and I'll take a look at it. And but send me the details. At least if I'm going to give you some advice, at least I should have enough information. Okay. So anyway, let's see what I mean, the markets as of now is just basically they're all sitting. Look at this here. Nothing retracements. They all came back 100%. Nothing is really moving. The Aussie yen, and keep in mind, even the ones that they are down, but they are still the strongest. This is still okay. They came back in. All the buys came back in. This tells you that this is and when you look here, you see reversal. REV means reversal, 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 reversal. Everything has reversed. All the market has reversed from the morning. So now we have been close to the time of getting out, but they are still sitting. I mean, there are structures in the chart. You see those 2 dashed lines? These are structures in the chart, and the euro is holding it. So we'll see. I like to trade until I get the money that I want to trade, and then I'm done. Because the longer you stay at the table, the more you give it back. And if it's a day like this that nothing is happening, then I shut it down, and if I'm having them staying good. I don't close the trades to take profit. I close the trades to get out of a losing trade. My minimum risk reward, I mean, I'm looking at 7 to 1, 8 to 1, because we only take high probability trades. But you just have to be I mean, this here, I mean, this is 3 lots, this is 2 lots, this is 2 lots, this is 1 lot, this is 2 lots. So basically, I'm risking on each is like 20 pips on every position. Aussie yen, sure. These are the entries. And my stop is going to be on the other side of the range. I don't know what you mean if 20 is not too close to a risk. What do you mean by that, Boyki? 20 stops? 20 pip, you mean? No, I don't put 20. No. This is my stop. When I bought over here, the trend was up. I took it in the direction of the trend. All what I'm having now here is this is a move. So I don't know if this move, all of this now is coming into a neutral zone. So in a neutral zone, you have to give it some time to work itself out. If it goes out of the neutral zone, then I close the trade. As long as it's inside the neutral zone, then I'm staying with the trade. Now this is getting, the Aussie yen is really getting to be, what about the average daily range? Bread maker, we have very specific rules for most of the market conditions that we trade. And if there is a situation that I can consider as high risk or something that does not give me a trading advantage, I will not trade it, nor will any of my traders trade it. Because we do not have a trading edge. I'll give you an example, and this is not a critique. For example, we do not trade the first 5 minutes or first 10 minutes of a news report. We will never do that. This does not mean, oh yes, of course I trade multiple lots. This does not mean that somebody else cannot do that. Somebody else can be a much better trader than I am. But this is something I do not know. And from my experience in my own trading, hasn't been beneficial. So based on that, it doesn't give me an edge, because some days the reaction to the news is much more exaggerated. Like for example, the other day, it's exaggerated moves, and sometimes they are muted moves, and sometimes there is no consistency of why they behave this way. So if there is no consistency, then I cannot quantify an edge. So all the trades that we take are trades that give us an edge. You can call the office and see. I mean, we have some written stuff, and there is also the videos on the FX Street website. Sure. Okay, James put all the email addresses in. So anyway, the idea is every day you go into the market, you see what the and you begin to take the trades, and this is what you're having inside the neutral zone. It's just the neutral zone, so you just let it wait. As long as it's in the neutral zone, you're not we hold overnight trades that when we do our Sunday session, and you guys can go to the website and you can watch some of the old recordings. On our average Sunday session, on the number of pairs we take maybe 8 pairs. we average every week about 1,000 to 1,500 pips on our overnight trades. This is the stuff that we do on the Sunday session, the trade planning session. And if we have a trade that comes in here, these are the trades that we take overnight as long as our stops is not triggered. Some weeks we had over 3,000 pips, some weeks we had 2,000 pips, but on average we're looking about 1,500 pips on a mini trade, on a mini account. A pip is a pip, I mean, it doesn't matter what it is. No, we close the trades by Friday. By Friday, we close most of it. Unless it is, I mean, let me show you, for example, the EuroCAD trade. This EuroCAD trade, we took on that trade over 2,300 pips. Yeah, I'll show you. We went short from 159. We went short from 155.9 and we closed it at 134. So that's about 2,100 pips on that trade. So that was more, that we stayed with that trade about 4 months. We didn't close it for the week. It's your choice. Neither. I mean, it's best to enter them when they occur. It's not etched in the sand, you know, it's not etched in stone. Sometimes you can get a little bit of volatility around it. So you have to be patient. For example, one of the things that's most volatile is the pound Swiss. Okay? One of the most volatile points in the pound Swiss, let me write it for you, is 1.6945. So I want you to see that I'm writing it before I put the chart so that you know that everything has a meaning to us. I mean, I can be sitting in the beach and I look at the newspaper and I say, what is the pound Swiss doing? And the guy says it's going above 169.45. I pick up the phone, I can say buy. If somebody says that the pound dollar is trading at 1.4832, it comes below it, then I'm going short. This is how we identify the structural points, and these structural points pays us long time. So look, for example, at the pound Swiss. There is your 169.45. And these are two trades that we took last week. You bought it here when it came above 169.45. You bought it here at 169.14 when it gets above it. And then you close it. And then you made your money. And then you go short because it's below 169. So you had two trades giving you over about 100 pips on either side. Why? Because you're using a structure point and you're basing your trade based on the structure point. The same thing with the pound dollar. Is you're one up 500 pips and you're taking it overnight and staying with the trade. What time zone do you live in? There is no stupid question, Patrick. There are some trades we would like to go for the trades that on the ones that we do on the Sunday session, we average about 150 to 200 pips per trade on average. And we have but again, there are no two trades that are alike. And the problem, Patrick, is this. I can get you in the trade, but the trader is the one that gets himself out of the trade. So you can have two traders getting into the trade, but each of them will start making his decision to get out. See your question, I can't see. What's your question, Mr. Boyk? Write it again, I can't see. Well, you're talking about 100 pips is 100 pips. The difference between $100 and $1,000 is a zero. I mean, it's only a multiple of how many. If you're trading a dollar a pip or $10 a pip, it's only a zero. But as far as risk, as far as rules, as far as everything, it is everything is the same, and it's a virtue of your account. For Boyki, the overnight trades, what do you mean set beforehand? If it's above a structure point or breaks a structure point, then we stay with the trade for the overnight, because we know that these are trend changing trades. If you're in the UK, I am assuming, Boyki, so I would suggest you put price alerts, and once you get the alert, I mean, here what we have, for example, yes, Meaver, here in the radar screen, the way we have it set is that this is how, because that was one of the problems we faced. I have it here. We set the alerts. We can get the alerts via email. I can configure it. I can have this thing to come to me by email or SMS or whatever I want, and I can get, while I'm sleeping, I can get as long as the trade station or the platform is up, I can get the alert. So it's not necessary to place in open orders waiting to get filled into the market, because there would be sometimes that there is a fat finger. The structure point for the pound is 148.52, which is the one that I wrote. That's the structure long. If it gets above this, you want to be a buyer. As long as it's below this point, you want to be a seller. So let's see what's happening here. So the pound, the dollar yen is kind of holding. What do you mean you didn't get it? In what sense didn't you get it? The number is 1.4832. No, we don't use pivot points. We don't use support and resistance. We don't use that stuff. These are, when I say structure, it is the structure of the chart. The chart is like a building block, and it could be considered support. It could be considered, you can name it any way you want to name it. It doesn't matter. But what we're looking for, based on price behavior, we want to see what the market has behaved, i.e. going to a certain point and it stopped and it turned around, and now this has been a respected point, and then we see how the market reacted on either side of that point so that we can anticipate a similar behavior. The pound Swiss is 169.45. How is the weather down there in Costa Rica? It's getting winter now, right? I mean, they're telling me that next week in Chile is going to be cold. Yeah. Can you believe it? I'm leaving London in the cold and I'm going to Chile in the cold. But I'm just going for a 3-day seminar, teaching there a 3-day seminar. So I think I can survive. Yeah, I know London is warm, so now I'm going. No, it can be used. Yeah, close to Antarctica, I know. It can be used on trade station and multi-charts. And multi-charts, we can hook it to any broker or any data feed that you want. No, if you have a sleeping partner, you get divorced. No, the problem with empty platform is that we don't have any security on that. We're unable to put security on the software. So that's the problem with empty. We're trying to find a way around it, but we haven't discovered it as of yet. So hopefully we can find a way to, let's see the euro yen. I mean, if you look here at the euro yen, it just came back on the other side of the range and it's 10 pips below the range. So that was what I was talking about, but it's still not. I'm not gonna go there. This is basically some of our prop stuff that we use. And what's happening? I'm trying to get the screen. And it's in a way my age, 16. You want my trading age or my real age? Yeah, it's 55. I hope so. This thing, I don't know why it's unable to move the. I don't know, boy. I need help, guys. Okay, now is the jinx here. Anyway, I don't know how long we have left, but all of you that are in the UK, as I said, you're very welcome to come to the office and sit around. They will give you a computer. We're the only people that do that. Okay, whenever. And you can sit and play with it. And no, he was a broker. Now he's a hedge fund. He's a manager. He's a managing director of a hedge fund called Belton, and he's managing the USA operation. He was a full broker at the New York Stock Exchange. Harry. Okay, guys. I want to thank you very much. I want to thank FX Street for this opportunity. I hope you had fun. And we will see you back in July. And after I come back from Chile, I get a cut from him. Have you ever known a son give his father a cut? It's always the other way around, Boyki. All right, guys. Love you and leave you. And I'll see you next month. Take care.